Hey everybody, thanks again for joining us. So as we mentioned in our email, we really only invited about 10 people to join this. We think this will be a nice kickstart to a new investment idea we've been working on for at least a couple of years. We're really excited to finally be here. It's considered an open-ended fund, which we'll discuss what that means in a little bit here, but there's tons of advantages for all of us to do that, so we're excited. So just jumping in, this is going to be a private placement offering, 506C. So it'll be registered with the SEC, and so there's just some confidentiality and disclaimers involved in that. So we will have some legal documents just like every other partnership we've done so far with private placement memorandum, operating agreement, subscription booklet. So obviously I'll be working with each of you, and any questions you have, you can ask me directly on any of those. So just some reminders, we're using Zoom webinar, which actually has a Q&A feature, which makes it really nice and easy for us to keep track of questions, make sure we answer all of them. So if you do have questions, please drop them in there. I did get one over email, so we'll be sure to watch for that later, but that's definitely the easiest way to do Q&A is just that Q&A section. And we'll mostly do those at the end of the webinar, but if you have questions in real time, we are monitoring that. And so if it's something that it makes sense in that part of the conversation, we'll stop and talk about it then. And then we will also be taking notes on all the Q&A and sending that out after the meeting. So you'll be able to see those in the next couple of days. So here's our high level agenda. We'll talk a little bit about who we are. I know most of you already know us, but we're, want to share a little bit more about what we've been up to over the last couple of years, the investment strategy of the fund, the markets we're focused on, the initial assets we're going to be working on, and then just our business plan. So a little bit about Suncrest. I'll let Ryan read this one for you.
All right, thanks for joining us tonight, everybody. So most of you do know who we are. We're up to 13 mobile home communities. And we'll be sharing these couple of exciting opportunities we have in the RV space and other mobile home. And also one retail center. So we look for those affordable properties that have a lot of upside to them, where we can find value add opportunities for investors and deliver those returns for everybody. And it is our mission is driven by that, to return generational returns for our investors and really for our family. We're a family at Suncrest, and we're doing this for our own families, but we're happy to have you guys join us in the pursuit of that so that we can all benefit.
Great, thank you. So I'm excited to introduce our team. We have been building a really strong team over the last couple of years and working closely together. A lot of us are based here in the Boise area, but really we're a bit all over the US. So Ryan and I are the co-founders. I focus mostly on the investment and legal side. I have a background in corporate finance, MBA from Duke, where I focused on finance there as well. Ryan is our COO. He recently just went full-time just a few weeks ago. He quit his day job as a elementary school principal to become a real estate principal. We love that joke. So we're really excited to have him full-time in the business. He's got a long background in being a real estate agent and obviously elementary school principal. Lots of transferable skills from that have proven very nice in the mobile home community space. And we've got Matt. Matt is our third partner that also helps us out on asset management, underwriting, lots of really amazing things he's been able to do in Excel that has just been great for making sure we're protecting our assets and investments. On our team side, we've got Kristen. She is our regional property director. She's actually based in Kansas City, and so is Doug. So both of them are in Kansas City, which is really central to our property and portfolio. So Kristen focuses mostly on the property management side. All of our community managers roll to her. So she does a lot on the operational side. She makes sure we're doing collections. She oversees sales for homes, all those kinds of things. And then Doug has a general contractor background. So he does a lot of our inspections for us, manages a lot of projects, but ultimately he oversees everything with mobile homes, from finding them, transporting them, rehabbing them, selling them. All those kinds of things are kind of in his wheelhouse. And then Alicia is another one of our partners that we're excited to be working with. She's actually based in Eastern Idaho, and we connected with her over the last 18 months or so. Her and her husband have actually been investing in mobile home parks also in the Kansas area for a while as well. So that was kind of a serendipitous connection that we made with her. And she's been helping us out in a few areas, largely helping us find off-market deals by spinning up our own in-house cold calling group for off-market deals. And also helping us out with the property operations. Finally, we've got our two full-time employees that are both on the call here. Ali is on our investor relations and administrative side, and then Trip helps us out on finance. So he's got a really strong background in finance from Georgetown, and also worked at the state of Idaho and Clearwater Analytics. So it's been great having some of his industry knowledge come into the team as well. And I'll let Matt talk a little bit more about where we're focused right now.
Thanks, Brett. So this is a snapshot of the assets that we currently have under management. As you can see, we're mainly focused in the Midwest portion of the US with properties in Iowa, Missouri, and Kansas. And I think as Ryan's going to talk about, we've kind of really built a strong property management team in this part of the country. In Missouri, we currently have 4 mobile home communities in the Springfield area, and that's about 3-hour drive from Kansas City. One of the communities there, Rolling Meadows, is actually a little closer to Branson, Missouri, which is it's a popular tourist destination in the Midwest. In Iowa, we have 5 mobile home communities between Des Moines and Cedar Rapids. And just recently, we purchased a retail plaza in Newton, Iowa, which Ryan mentioned, and that's in the same town as the Country Creek Estates mobile home park. And in Kansas, we own 2 smaller mobile home communities in Lacine, and up in Idaho, near Ryan and Brett, we have 2 other mobile home communities. Let's go to the next slide. And today we're going to touch on a couple other properties that we're currently under contract for that are, when you think about it, they're really in our wheelhouse geographically. So it's a RV park in Fort Scott, Kansas, a mobile home community in Ulysses, Kansas, and another RV park in Caldwell, Idaho. Next slide.
As Matt alluded to, we have a strategically layered and well vertically integrated property management team from regional down to the property level, and really focused in the Midwest there with a lot of really great folks on the ground there. We recently, within the last year, we started our own toting company. So we have an actual almost like semi truck that moves the mobile homes for us. So we started our own business, and really that was to control the timing of our own home moves. It's very difficult to find transporters that can serve your need in a timely fashion, if they will even answer your call or return a call. And we're also able to, we've just recently started moving third-party homes as well for other community owners when we're not busy moving our own. And as Brett discussed, Alicia helped launch our US-based cold calling marketing team, which is super exciting because the 2 opportunities actually that we're presenting tonight were sourced by that cold calling team. Okay, cool. And a lot of you already know this, but we are Verivest verified. So if you don't know, Verivest is a third-party company that puts sponsors through careful due diligence process and ongoing portfolio monitoring, just to gain access to the Verivest platform. And then as principals, we agree quarterly to adhere to a code of conduct that they have us review and sign. And we've been vetted and verified through Verivest for the past year now, just starting our 2nd year through them. And it just adds really an extra level of confidence for our investors.
Perfect. So talking about an open-ended fund. So first I need to explain a little bit about a fund and how it works. So traditionally with the syndication, you buy one asset and you bring in a group of people to partner with and buy it. And then that one asset has a refinance period, has a sale period, and then you're done. With a traditional fund, it's essentially a close-ended where it's maybe 12 to 18 months or even 24 months where the operators are raising capital and then they have kind of a series of blind assets that they're buying. And they generally defer when they start making payments on the interest or on the investment. And then once the fund is closed, no further contribution, things like that. So there's certainly some advantages with that style that are similar to the advantages we get from an open-ended. The difference with an open-ended fund, though, is it operates a little bit more like a mutual fund in the stock market in the sense that you buy in shares and the share price may change over time. So in theory, for example, if you're in our first group, you're buying, for example, $1 per share. We haven't actually priced the shares yet, but you would have the base price for the shares. And then in a year, if we raise capital for another deal, that price would go up per share. So you could reinvest more into the fund, or you could reinvest your dividends into the fund. But any new investors would have a higher cost per share so that there's no dilution for the first round of investors. So just kind of showing you a little bit more of a high level of some of the advantages of this fund. So some of these work with the same as a closed-ended fund and an open-ended fund, but the diversification really, it's exposure to a lot of different assets immediately versus having just one or two assets that you're buying into. What's nice about this one, we're going to talk about two assets we've already identified we're already buying over the next couple months, and they're already outperforming our return profiles. And so as we continue to buy more, if you buy into this first one, you'll still have ownership in anything we buy in the future. Economies of scale, this is sort of an obvious one, but with buying common ownership, there's a lot of really great benefits you can get then over just one asset. One is the ability to just really see a lot of synergies through operations. So you can have the same operations group. You can have the tax structure is much more simple because really it's just one filing for the parent company, and then the sub entities each have their profit and loss statements, but the expense and the complexity is much more simple than if they were each filing their own tax returns. You also can overall bring in less reserves on a fund that you could on individual properties, because each individual property, if they're just standalone, would have to have its own funding and reserves and backup. But when there's this diversification and a suite of several different properties, you're able to have less per property because you have more at the parent company level. So that helps also with returns because you're not raising extra money just to have it sit in the bank for just in case. So a lot of really great benefits we like from that, and there's even more that I'm not even talking about with the scale piece. But moving into the flexible timing, with a close-ended fund, essentially what happens is they raise all the money up front. So they might raise $10 million day one, and they don't even know what they're going to buy with it. And so what's happening is the clock is ticking on that $10 million to go and invest it right away. And so they may be frivolously buying things that don't actually make sense for the community or for the fund because they need to invest the capital. Where with ours, we're just raising what we need as needed. So we have two assets right now we're closing in a couple months. We actually have a third and maybe even a fourth that we're currently working on that we're interested in putting in this fund as well, but they're far enough out that we're not quite ready to raise for them. So we'll increase the amount we need once we have those in here. So it just gives us a little more flexibility and ensures we're not over raising and then pressured to buy something for the sake of buying it. The other thing that's great is with that timing perspective, you can clump several assets together into sort of mini portfolios within the fund so that you can do pockets of financing. Where this really gets beneficial is on some of our smaller properties are off market, and it's difficult to find someone to finance, like a bank to finance a deal that's less than $1 million because they want the bigger deals that have the bigger fees. So if you start having 4 or 5 smaller deals that can come together to be $2 or $3 million, you can get much more favorable financing just from that. The other thing is you can sell them that way too. So buyers are more interested in buying large portfolios. So at the end of the day, we don't need to sell all of our assets at the same time. we can sort of pocket and say, okay, these 4 that are clustered here in the Kansas area make sense to sell all at the same time, where the rest of them we're going to hold on. So just a lot more flexibility from that perspective. I already mentioned before, there's no dilution with an open-ended fund. Unlike a normal capital call, where if you don't reinvest every time that the operator needs more money, you would be diluted. In this case, because we're changing the purchase price per share to reflect the market, your dilution is, you're not going to be impacted from a dilution perspective. We're also going to be doing a dividend reinvestment plan. This is similar to a mutual fund structure where rather than receiving cash for your dividends, it will just automatically reinvest and you'd buy more and more shares, just to give you even more flexibility. And then funds are more liquid as well. So with the fund, you're able to cash out your interests at the market value. Of course, that depends on fund liquidity and other elements in the market, but that will be a clause in the operating agreement that you're able to cash out if needed during any period. And then again, familiar structure. This is, like I mentioned before, it's very similar to operating a mutual fund in the sense of purchase price per share and that liquidity aspect. So moving into the investment strategy, we have a target profile. So this is essentially what we're looking at, what we're trying to buy. So we're trying to buy, or we are focused on buying, I should say, assets that have 20% or higher investor IRR. So that's net IRR to investors. We're planning on holding assets for around 10 years on average. Certainly, we're going to have some that make sense for much longer than that. We'll have some that make sense for a lot shorter than that, more of like a flip opportunity, for example. We will pay 8% preferred returns. We do like to pay those monthly. And then the other thing on here that I'll just point out is we have a heavy preference for off-market deals. And all 3 of the deals we're going to talk about today, we sourced off-market. Finally, on the acquisition criteria. So we have a heavy focus right now on mobile home communities and RV parks. So that's what we're primarily focused on. We also have a partial focus on the Midwest as well as Pacific Northwest. Specifically in those markets, we're looking at Springfield, Missouri, Kansas City, and Des Moines on the Midwest side. And then on the Pacific Northwest, we're looking primarily in the Boise area. We certainly have some things we're looking at outside of those markets, but those are by and large the places we're focused. And then again, high preference for off-market acquisitions. And these are the quick introduction on the 2 assets we have already under contract, closing very soon. So the first one, Bedrock Mobile Home Community, is a large mobile home community we found in the Garden City, Kansas area. It's over 100 pads. We bought it. We're buying it for about $800,000. So it's ridiculously low purchase price per pad, with lots of really great upside. One of my favorite stories, actually, both of these were found by one of my friends that's in his late 70s, and both of these sellers are older and just really connected with them, and it's been a really great relationship for us to develop with these owners. And actually, Alicia, who's on the call, does a really great job connecting with owners too. So I think we've really got some magic working with our off-market flow now. We just spun it up over the last 3 or 4 months. We've already found a lot of really great deals this way. So really excited. Both of these deals, again, we are projecting higher investor returns than we have for our target. They're both value add plays, so they're not going to be your short-term play. These are both projected to be 5-year refi and 10-year hold. So moving into the market, and again, we're going to focus on these 2 specific markets. I'll have Alicia start us off here.
All right, so let's go ahead and talk about Bedrock Mobile Home Community. So Bedrock, as Brett mentioned, is a larger mobile home community, and it is the only one that's in Ulysses, Kansas. And what's great about this one is there's multiple areas I'm going to be talking about here that really support this asset. One of them would be the major businesses that support the community, being Pizza Hut, McDonald's, Family Dollar. There's Nampa Auto Parts and Sonics. And the big one I want to hone in on that's going to be a big contributor to the community is about 54 miles away in Garden City, Kansas. They are building a meat processing plant there. The company is called Empirical, and they're one of the biggest meat packing producers that we have in the area in Kansas. And with that, they actually started building it back in December, and they plan on finishing production by the end of 2023. And with that production, they're going to be bringing in at least 300 employees. And those employees are going to need to live somewhere. So Ulysses, when we have our infill project that we're really honing in on, we're going to be marketing in Garden City and Ulysses in the nearby cities to acquire those individuals to come live in the park. So that's going to be a big upside for us because, I mean, it couldn't have came at a better time. Another thing that is big with Ulysses, Kansas is the unemployment rate is about half that of the national average. So that's a big plus. Now, when you look at the bottom here, though, you'll notice that there's 3 different icons that I'm going to be talking about. One of them is the actual MSA population is about 7,000 people. And we generally like to see more than 100, but the other 2 aspects that I'm going to talk about really offset that and make this a very valuable asset. One of them is the average median income for the area is 14,000 more than what we like to see. So it's 54,000. And the single family homes range from about 126K. What's great about that is that our infill project is to bring in a total of 36 homes for Bedrock. And they average between 20K to 30K. So there's not going to be any direct competition with the single family housing community. And that just gives more area for us to expand in the Bedrock mobile home community. So that's just a little bit of tidbit about Bedrock. And we'll go on and explain some more in the next slide.
All right, so we do a test demand for every new market that we're looking at purchasing, and at first glance, we look at Bedrock, and it's the population is lower than we typically will look for. So I was a little skeptical on what the demand might be. So running the test ad, though, it was a very solid demand. So I'll start at the bottom number there, the total number of Google Forms completed. So we do this through Facebook Marketplace. We'll have a link. We have it essentially says homes coming in 2 to 3 months. Who's interested in buying their own home, financing a home, or like an LTO or rental, to kind of see what the tenant demand might look like there. And the form itself has some filtering criteria. So it explains that we don't accept felons, sex offenders, that type of thing. There's typically a minimum salary that people need to have to qualify for purchasing these homes, pet policy kind of thing. And so it's another level of filtering. So some people filter themselves out of that right away, which is good for us to know as well. But it takes 2 to 3, 4 minutes maybe to fill out that form. So it's more than just somebody clicking is this still available, which we do track that as well. But we had 14 people fill out that the Google form, which anything over 10 within a 7-day period shows solid demand. And I turned this test ad off after 24 hours, very surprised that it performed really as strong as it did. So we're excited about the demand for that. Okay, for Crossroad, Fort Scott, Kansas, it's about an hour south of Kansas City, maybe an hour 20 minutes. This is only 20-25 minutes south of our other mobile home communities in Lacine, Kansas. So this was an off-market deal sourced by the same gentleman that Brett was talking about. So what we like about it is our regional managers, so Doug and Kristen, they live less than an hour away from this property. The purchase price on this property, very favorable, only $475,000 for Matt can correct me if I'm wrong. It's, I believe, about 65 spaces once we have it all developed for an RV community. The population, again, as Alicia was talking about, is a little lower than we typically look for. Our mobile home communities that are just north of here, or even in smaller communities, and we've had no trouble with demand for that product. Even though RV parks are different, obviously, but Matt will get into, like, the location is awesome here. It's right at the it's called Crossroads for a reason, of these two major highways, running north and south from Kansas City to the southern states, and then east to west as well. So strong traffic counts, over 25,000 vehicles a day are going by that area. Median income is right where we expect it to be, and median home price is strong as well. So a nice diverse little community. There's a Walmart within 10 minutes of the RV park as well. So
Yeah, just south of it.
this one.
All right, let's talk about mobile home mobile home community advantages. There are many. So let's go ahead and jump into the supply and demand. Right now, with affordable housing being more on the rise now than ever, mobile home communities are a must. Right now, there are approximately 45,000 mobile home communities in the US. And a lot of the states, depending on where they're located, they have what's called like a moratorium on building more of them. So really, this is the niche that people are starting to really get into as an investor, and they're really coming into this knowing that the investment return is great because the supply and the demand is there. So that's a big area for mobile home communities, is the demand for it. Not only that, they're recession resistant. When the economy takes a dive and times get hard, a lot of the time it's those luxury apartments, the Class A, Class B, they get impacted first. And the mobile home communities are last, just because a lot of the people that are living in those communities are the framework of the economy. So they're working in those general areas that we really need to make this nation run. And so they're really the last ones to be impacted. Another great area for advantages would be what we all love, which are significant tax benefits. There are three major areas that really come into play with this. One of them is large immediate tax deductions, the tax deferrals for alternatives to the 1031 exchange, as well as potential for tax-free returns. So those are just some of the main areas that really I enjoy very much for mobile home park investing. Forced depreciation is another one. When you get into a community, especially if they have value add, which Bedrock does, where you're raising lot rents to market value, you're bringing in more homes for infill, you're having utility bill back. That's just to name a few of just those general actions that you can take to really appreciate the value of your community. And last but not least is the fact that even though they're called mobile homes, they're really not mobile. Just with the general low end of moving a mobile home into a community, it can run from the lowest value I've seen is $4,500. I just recently spent $10,000 to move a trailer. So it's really a lot more money depending on who's available. As Ryan mentioned earlier, it's sometimes hard to find a mover. They're very busy, especially right now that this is really blown up and people are wanting to invest in mobile home communities. So once we have somebody move in, they're more likely to stay for a long period of time, at a minimum of 8 years. So it's just a great asset to have and to be a part of. Next slide. All right, RV advantages. Okay, so with this one here, this is a great pictorial of something that is pulled from Heather Blankenship's RV resources. This was very interesting to me because when you think of RVers, you don't really think that it's going to be the generation that is noted here, which is the millennials and the Gen Xers. So if you can see on this graph here, it gradually increases in the percentages from 2017 to 2020. And it's not in the areas of borrowing an RV to go on a trip from friends or from leasing from a company or renting. It's actually from purchasing of the RV has been actually on the rise. And this has been significant even in this last year. And my next slide will go into that a little bit more on the percentage side of it. But the reason for this that I love is that a lot of the times there's a stigma with millennials and Gen Xers that they're more risk takers or that they're chasing the dream, which is great for us because they all go out and they buy the RVs and they hit the road and they come to our communities and they want to live there. There's long-termers that stay there, or they're short-termers, but either way, whatever avenue they take, it's lucrative for the RV business. So it's not the baby boomers that are going out and doing a lot of this. It's actually that particular populace that's doing it. And we couldn't be more happy about it. So I just wanted to show this as more of a trending show that this is on the rise, and it will continue to be that way. Next slide.
Right.
There it is. Okay.
It's this
So
one, right? This is what you want?
No.
RV
the next
advantages?
one. Yep, that one.
Okay.
Okay. So RV advantages continued. So this last depiction was more of who is our clientele, who are the main people that are going to be coming in to our RV parks and really spending their money. But I'll get to that when it gets to the pandemic proof, because that's where the percentage is. But let's start with supply and demand, because that's just as important as anything else. So as we all know, we've watched the news, we see what's going on. There's inflation in costs at a ridiculous level. And there's a new wave of individuals that really want to live that free bird lifestyle, which is great because that means that there's going to be more influx in the RV parks. So because of the economy being what it is right now, and people really wanting to seek that simpler lifestyle, the supply and demand area for RVers is just going to significantly go up. I was just recently listening to some statistics that Heather Blankenship, she's again in the investor entrepreneur world for RV parks and mobile home parks. And she was talking about the trending just significantly increasing the last 10 years. And opposed to mobile home communities, that one's already out there. The 1% of the rich already know it's there, and they're trying to get those and scoop them up as fast as possible. But the RV parks are still kind of in the shadows. But as soon as they get more wind of the profitability and the massive cash flow that comes with those are going to be next on the list, which is a great segue into the multiple sources of income. RV parks have so many and they cash flow so well. It is like a business because that's what we would be buying, but the different sources of income for these, they have returns and yields of 10 to 20% on your money for the return. So it's one of the highest yielding investment classes that are out there. And in terms of the sources that you get your income from, you get them from propane, from ATV rentals, from golf cart rentals. You can get them from pool access cards is something you can do. Overflow parking, you can charge per vehicle. The grocery store is a massive producer of income on the RV parks. So the multiple sources of income, that they're endless that you can do. And there are so many different ideas that people are doing to make it. Another one that you see all the time is the housing crisis. Right now, it's really hard to find homes for a reasonable price. So people are getting into their RVs and living in them. A lot of RV parks allow people to live there long term. So another big reason why the RV space is booming is because people are tired of trying to find that home and pay that mortgage that they can't afford. So they're packing up their family and going, which really leads into the experience, right? Because there are some RVers that just go for the travel experience with their family to get away from the technology and reignite that really family bonding time that people are really aching to have right now. But also there are people that, because of the housing crisis, they're forced into this area, they enjoy it, and they want to live there full time. So we have two different sectors of the RV parks. There's the long-termers that live there and the short-termers that just want the experience. So it's the best of both worlds. And then last but not least, it's pandemic proof, which is great because there's another strain going around. And I think COVID is just going to be one of those things that we just have to live with. But if people want to go on a vacation and they want to enjoy it with their families, they don't have to go to a hotel room where they have other germs from other people. They get in their RV, they go, they have the space they can to enjoy their time. So it's more appeasing to people to say, I'm going to go on an RV trip. And really, if you look at the statistics for this too, based off of the last graph that I showed you about the increase in RV sales, just in the last year, there was over 17% increase in RV purchases nationwide. And that's just trending upwards with the data that we've seen. So this is just the beginning of really the RV advantages. We can go on and on, something we're very passionate about and believe in. And we have a good group of people to do this. And I wanted to just end on this note before going on to the next slide with a Chinese proverb that I've just heard that talks about the best time to buy a tree is 20 years ago. The next best time is now. And that really does align with getting into assets and buying them now so that you can grow your generational wealth and your general wealth. So just want to leave that little nugget with you before we go on to the next slide.
Sorry, I guess a little out of order. We can right now.
Yeah, this looks good.
You're good.
All right, so I'm gonna quickly walk us through two of the parks that Brett mentioned earlier. Describe a little bit about our strategy for the parks, which are the Bedrock Mobile Home Community and Crossroads RV Park. And I'm going to start with Bedrock here. So as we've talked about, it's located in the southwest corner of Kansas near Garden City, and it's really the only mobile home community in or around Ulysses. So there are 102 lots there, with 65 of those lots are occupied with tenant-owned homes, and the rest are vacant lots. And as I think, as we were mentioning earlier, you know, these are the types of properties that we really like to buy because there's that forced appreciation that Alicia talked about. You know, it's the opportunity to add value by adding more homes and, you know, simply increasing the revenue that you're getting. And as Ryan mentioned, you know, we're confident that we're going to be able to place people in these homes. The test ads looked good for there, and you know, there's that strong demand for affordable housing. As Brent mentioned, you know, we found this property through our team of cold callers. It was a mom and pop owner that was just looking to retire. We were able to get this property under contract for $800K, which is, you know, we bought it at essentially a 12 cap at the current NOI. So we feel really good about the going in purchase price for this property. So, you know, once we gain possession, you know, we've got a strategy for this, and, you know, we're going to immediately start the infill process. We've underwritten infilling 27 homes over the first 3 years. And quite frankly, I think that this is pretty conservative, and I think that there's the opportunity for us to potentially even infill faster. We intend to directly sell to tenants as many homes as we can. And we can provide them, you know, financing options through different relationships that we've created with PEP, 21st, and Triad. And then for potential tenants that really don't qualify for any of those programs, we can also offer lease to own options as well. I'd say another great opportunity at this park for us to generate more revenue is through billing back water. The residents in this park recently had a $60 rental increase from $160 to $220. So what our plan is to install Metron meters and start billing back water towards the beginning of 2023. We're not going to increase the rents during the entire year of 2023, and then in the beginning of 2024, that's when we'll kind of start like an annual cycle of raising the rents by a conservative amount in the mobile home world, about 8% annually. There are some upgrades that we're considering for this community. We've budgeted to improve some of the infrastructure of the park where it's kind of required in terms of the water, the sewer, the electric. There is a lagoon on site that needs some upgrading as well. And then we also intend to install like a robust playground for the community. I'd say with the infill, billing back the water, the modest rent increases that we're proposing, you know, we see revenue scaling for this property from approximately like 189,000 in year 1 to, you know, almost 500,000 by year 10. As Brett was mentioning before, we think we're going to be able to achieve an investor IRR of over 25%. and a equity multiple of about 4x over a 10-year hold. I'd say one other note that I wanted to make about this property is that you can see the open space on the north side of the park in the picture there on the right-hand side of the screen. There's a potential to develop this area for more mobile home lots as well. This is something that we may consider, but it's currently not part of our plan, and we haven't underwritten for that yet. So next slide, please. So now I just want to kind of quickly touch on the Crossroads RV Park. Again, as we mentioned, it's another property we found through our team of cold callers. And this was essentially a property that the current owners, they just didn't have time for. They see the potential in it, but they've had other business interests, and it was kind of taking their attention away from the park. So they were quite happy to try to work with us to sell it. It currently has 59 RV spaces, a clubhouse, 6 really nice cabins that are being Airbnb'd, a fishing pond, a swimming pool. And it's really the only camping option within 15 miles of Fort Scott. We do have plans for this park as well. And one of the things I would say is being able to find it online. Being able to find this park online or being able to book is extremely cumbersome. To get into this park, you have to write the owner or an email or call the park. So one of the things we're going to do is enhance the online presence for this place and enable booking through a site like CampSpot, for example. We also see some strong opportunities for improvements here. There's some infrastructure upgrades that are going to be required with fixing some of the electrical connections running to some of the RV spots. We intend to improve the roads there, remodel the clubhouse, potentially provide laundry facilities, create a dog park, and develop some tent camping sites, as well as also some areas to do glamping as well, such as yurts. As far as like the returns for this property, we project a year 1 NOI to be about 86K and expect that to scale to probably around 185,000 by year 10. We've underwritten sale for this at around a 9.5 cap, which is pretty conservative. And with all of that, this would provide an investor IRR of over 23%, and again a 4x equity multiple. Next slide. So what we've written down here is essentially all of the things that I just spoke about in terms of our plans for the park. So it's a little repetitive, but we wanted to share it because we're going to be talking to you again. And so this is our kind of year by year plan in terms of the numbers of homes that we intend to infill into Bedrock, and some of the upgrades that we plan to do in Fort Scott. And like what we'd like to do is show you this when we meet with you on a regular basis to talk about these properties, so we can kind of show you where we are in terms of the progress of our actions. Next slide.
Great, thanks, Matt. So we do have a couple more slides after this, but just wanted to interject real quick the timeline. So both of these parks are closing over the next few months. In fact, that Fort Scott one is scheduled to close on August 17th. So this is our investment timeline. We'll have the documents available within the next 2 weeks. And then initial funding deadline of August 12th. The reason I'm calling it initial is because with this being an open-ended fund, as we have other assets, obviously there'll be more opportunities to invest more or at a later date, obviously with the mark-to-market on the share price. And then I've just got here in the bottom right the instructions to be able to invest. So it's really just our site. If you just go to suncrestcap.com and click on invest, it'll take you to our Syndication Pro portal, which is where you'll be able to set up profiles. I think most of you already have profiles with us, so it shouldn't be too hard, but obviously email me if you have any questions. Happy to help. And with that, we have one more thing we want to talk about.
All right, this is our bonus opportunity we talked about a little bit. So Country Corners RV Park. So this is only about 25 minutes from where Brett and I live. It's in Caldwell, Idaho. So it's about 61 spaces, 50 of which are long-term. Some of those residents have been there for 4 to 5 years. It is beautifully maintained, beautifully manicured. Really, the only way you would tell that there's some long-term tenants is they have like these large propane tanks that are automatically filled by a company. So another off-market deal through just a relationship with a broker that brought it to us. It wasn't listed. General store. It has laundry facilities, showers, propane sales, fishing pond. We were just there this last weekend with a large team doing our on-site due diligence. So now we're coming through. I think we now have all of the financials that we need to really come through and dive into the underwriting. But very excited about this possibility. So it very well could be folded into this fund. But like I said, we have to do our due diligence and make sure that it's going to make sense to our criteria. And a happy, proud dad moment. My son he's a 15-year-old, and he came with us, and so he created this little video that highlights kind of some of the main features of. I think Brett's going to try to get it to play here.
While I'm pulling this up, just please feel free to drop any questions in the Q&A section. This is our last thing to show before we jump to Q&A. Need to fix that. We're pretty excited about the possibility with that one. It is just 30 minutes from where Ryan and I live. So we've been there a few times. It's actually, Caldwell is a really cool town. We travel out there for dinner and just hanging out. They've got a really cool like downtown area with lots of restaurants and retail. So this is a really cool opportunity. With that, let's see. I don't actually see any questions in the Q&A section. Allie, did we miss any in chat?
I do not. Oh, I see a Q&A question now. We have Eric saying, any concerns about the lagoon?
So I'll start on this one, let Ryan go with it next. We joke a lot about sewer in our business. You get to learn a lot about how sewage works when you own mobile home parks and RV parks. And we've worked on projects with city sewer, with septic, wastewater treatment plants, and lagoons, like really everything. And honestly, lagoons are the easiest to work with for a lot of reasons. They're close to free to operate. There's some testing, and they're just like really low maintenance for the most part. Obviously, we'd prefer city sewer or public sewer because that's something that, you know, when we go to sell this, it's something that buyers are going to consider. So whenever we buy something that's got private utilities, we always look at the possibility of connecting to city sewer. So that's obviously something we'll look at over the holding period and possibilities. But we're really not concerned otherwise from an operations perspective. Ryan, you have anything to add?
Yeah, no serious concerns. The Fort Scott one, it's licensed and there's no issues or upgrades needed. There's just a couple of minor things on the Ulysses ones I'll let Alicia speak to.
On the Ulysses Lagoon, we just have 2 areas to really bring it up to code, and they're minimal. It's just rocking the top and then putting a liner in the cells. Other than that, all the other structures are in place. It's permitted, it has the right licensing, fencing, all the other areas that are required to run the lagoon are met. So we're guesstimating that overall amount to fix those 2 areas will be about $50K. But that's really the only area. Otherwise, it's tip-top condition.
Next question is the intent to refi assets in 3 to 5 years and return as much capital as possible to investors? Yes, absolutely. Our general playbook is to buy something we can increase the value within the first few years, do a cash out refi, return the capital to investors, hold it and enjoy the cash flow, and then sell after several more years. So that's definitely the intent. One thing I'll say too, and I don't see any other questions, I just wanted to mention this. One of the cool things about being in an open-ended fund is you kind of get that benefit throughout, because you're buying in now with just 2 properties, and then in a few years, we'll probably have 10 to 20 properties in this fund, and still be enjoying that capital buyout from each of those as long as you continue to have that ownership. Our appraisal is complete. I know for Fort Scott it's complete. Do you know on Bedrock?
Bedrock's not yet. We're still working with lenders on the Bedrock one, but the Fort Scott one's complete. Like many of them, the as is came in at sales price, and then the as I forget the terminology, but once we stabilize it, Matt, correct me if I'm wrong. I think they said about 1.35 million.
Yep, you're right.
Yeah.
Yeah, that's pretty awesome. That's almost triple what we're buying it at. Yeah, and one thing I'll say on financing, because I know there's a question before on financing for Fort Scott, with it being an RV park, we're actually getting, we were approved for a small business administration loan, which is awesome. It kind of gives you the advantage of higher leverage, lower returns. So we're excited about that, and we're looking to do something similar with the Caldwell property. The next question that just came in, will you be doing cost segregation studies on these parks and take advantage of depreciation, accelerated depreciation? So the short answer is yes. The longer answer, I'm trying to find our slide where we talk about this. I just wanted to kind of briefly talk about what that means. So with cost segregation study, we're able to actually allocate all of the different materials in the communities down to carpet versus tile versus linoleum. They depreciate each of those at different years. And then we're able to essentially accelerate all the depreciation, or most of it, to be able to be recognized in year 1. What we've seen just from 2021 tax returns, we were able to return 80% depreciation losses to our one portfolio and over 120% to a different portfolio. So it's pretty significant tax benefit. So yes, we love that one. Yeah, Ryan, did you see that last one?
Yeah, so the RV park's fairly small parameters. So I think like we can take advantage, the Fort Scott one, we can take advantage of our the synergy of our management teams that we have in place already. And there's already a great husband-wife management team on site there that plan to stay there. So I think if the deal makes sense for us on the investor side, we haven't talked maybe about a minimum on the RV spaces, but 50 would be likely the smallest that we would consider or look at. This one, especially in the long-term RV area, we tentatively said 20 spaces that we could put in there. There's probably room for more like 30 to 35 once it's all said and done. And we didn't calculate additional spaces in our underwriting towards, like we talked about this idea of adding maybe equestrian camp spaces down in the area where the pool is, and the kind of the area D. By the way, this used to be a KOA campground a number of years back. So it has the pool, it has the clubhouse, all of which need fixing up, but it can return to that type of a property.
Yeah, and just to like, you know, build on top of that in terms of like the effort and energy for just a 50 pad RV park, like Ryan mentioned, like we already have like a great management team there. They live on site. They live in a home there, which is really important to us because we're operating a business there, and to have people that that are going to be on site is very important to us. And then we also mentioned Kristen and Doug, who lead all of our asset management for the Midwest, and they live hardly an hour away from the park. So it just seemed like the right opportunity for us.
Yeah. Great follow-up question. Camping year round in Southwest Kansas, not for traveling campers most likely, but for long-term, absolutely. There are a number of like let's see, wind farm jobs that are out there, wind farm maintenance, wind farm development. So those types of contractors come in for 3 to 8 months is what we were told fairly regularly. So there is a demand, there's a high demand in this area for long-term or month to month. And in our underwriting, we vary our models to reflect that. So in winter months, colder months, we have a higher percentage of long-term versus summer, where obviously there's more profit in short-term or dailies or nightlies. So that's a dynamic that we intend to play with on both of these RV parks we're looking at.
Great. Not seeing any other questions come in. Here we go. Okay, good question on the splits. So the split will be, so we'll do 8% preferred return and then 70-30 above that. So, and that, what's nice about this being a fund is that will be in all of our properties. It's the same structure across everything in the fund.
Yeah. Matt, do you want to tackle the cap rate on the RV parks?
So like as the park is currently running, there's not like a lot of revenue there, because I said it's been pretty neglected by the current owners. So we don't really like the entry cap is, I guess, kind of low, but the revenue, like there's a lot of easily picked revenue that they weren't getting right now. So I think I'd mentioned like we expect the year one, I forget what I said.
Yeah, the year one NOI at 86,000 would put us at a 18% cap rate at the end of year one.
So
yeah, and yeah, it's just a crazy low purchase price that
like
that we got on it. So
basically giving it away.
Yeah.
So another question on how do we mark to market? So this is a system that we're still developing. We've worked with another group that does has an open-ended fund, and they also mark to market, and they sort of have a third-party assessor, but it's not the same as a full assessment, because assessments are pretty expensive. They're $2,000 to $4,000 per property generally, so that wouldn't really be viable for the fund. So we'll have a third-party assessment, but it'll be more of a remote assessment at a higher level. Really good questions.
Yeah, very strong. Okay. And we're always available. Reach out, email, schedule a Zoom, whatever it might be, to answer any further questions or something that you think about in a couple hours. And I should ask that. No problem. Just circle back to us, and we'll jump on with you.
Yep. And with that said, this is our contact information. So Ryan and I are here and able to respond quickly to any questions you've got. You can also email us at investors@suncrestcap.com, and there's a few of us on that group email, so including Ryan and I are both on that, Trip and Ali, so that you can get a faster response that way sometimes. Okay, with that, thank you, everybody. We will be sharing out this recording with everybody who's on here, as well as sharing the transcript for the question and answers.
We do have one more question.
Are you getting long-term financing or bridge through improvement? So the answer on both of these deals is long-term financing. So we have Small Business Administration on Fort Scott, and it's at least a 5-year term. I need to double check to see if it's a little longer. And then what we're currently being quoted on the Bedrock Mobile Home Community is very similar. It's another 5+ years. Okay, thanks everybody. You're probably hearing my 3-year-old out the door yelling at me, saying it's time to be done with this webinar. And I feel like that's where we're at with the Q&A too. So everyone, thanks so much again. And please do reach out to us if you have any questions. And we'll share this update shortly after this weekend. So thank you all. Have a great night.
Good night, guys.
Thank you.
Thank you.